Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. It was Fed Day, and we're seeing the dollar finish higher. Ultimately, the Federal Reserve tried their best not to do anything here. But really what they did say in the statement started to give, it came off initially dovish with the fact that inflation is running below their 2% target. But really what we started to see here was Fed Chair Powell's press conference where he called the low inflation or dissipating or soft inflation, whatever you want to characterize it as, called it as transitory. This means that he expects inflation to pick up in the latter half of this year, which also means they could see pressure to force them to hike rates. Now, I am jumping ahead of things just a bit here to say that it would force them to hike rates, but remember, what they are right now, the CME's FedWatch tool is pricing in or coming into this a probability of roughly 65% chance the Fed would cut rates in 2019. We're seeing some of that move off. Now you're looking at a about 40% chance that they leave rates unchanged, and we expect that could rise just a bit more here into non-farm payroll. So what does it mean? The dollar did reverse sharply after making a new low. It is finishing higher on the session. The euro did get above 113, but it's not settling on above major three-star resistance. The yen, very quiet, given some weakness in the equity markets due to a less dovish path perceived here from his conference. So you're getting a little bit of safe haven demand. The treasury prices moved up initially. They came back, but they again are settling in here with equity markets ticking down just a little bit here ahead of the close. But what did take a hit on this dollar strength? Obviously that euro from the highs, but more importantly, you're seeing the Aussie dollar and the Canadian dollar both down sharply. Copper, the commodity, got hit. It's down about 10% on the 10 cents on the session, and that's dragging down the Aussie dollar. Of course, you're seeing crude oil off of yesterday's highs. You're seeing the commodities really make a drag on those commodity currencies. Right now, though, the best way to approach this heading into non-farm payroll is that the dollar looks to have a path of least resistance higher. Let's not forget that GDP did come in at 3.2% Friday, regardless of the fact that inventories were bloated, and that would weigh on the quarter two numbers. Now, the data in the U.S. has not been anything really to write home about, and the city economic sentiment index is at the lowest level since 2017. So, the data again here in the U.S. though is better than its counterparts, and right now the fact that the Fed feels that that inflation or the low inflation or the dissipating inflation or the soft inflation is transitory, you've got to look for the dollar index to bounce back up. Remember that type of strength it had in the middle half of last week. We can start to see that reinvigorate a bit here over the next 24 hours. But on Friday, don't forget, there is non-farm payroll. Give us a call. We're here to talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thank you.